Joining us now is one of those letter writers, Senator Elizabeth Warren of Massachusetts. Welcome back, Senator. Good to have you here.
It's good to be here.
Why do you're an outlier here, and your colleagues, Senator Hickenlooper and Whitehouse as well, because most people don't see a need to go that deep in cutting right now. Make the case.
So let's start with Jay Powell. He's already made the case. He said he waited too long. And the best way you can show that you waited too long and that you get it and that you are becoming more responsive to where we are on interest rates is actually go ahead and do a nice big rate cut. Keep in mind that keeping those rates high, as he has done, keeping those interest rates so high, actually has contributed to our measure of inflation. So it means for all those housing developers out there, we need more housing, right? They say, I can't afford to do this because the interest rates are simply too high. Borrowing costs are so high. It means we have fewer new apartments coming online. It means fewer new houses coming online. And it means for families who want to buy, the cost is higher. And talk about a loop that feeds back into the measure of inflation and keeps that number high. Look, overall, we know we've headed in the right direction. Inflation is right now around 2.5%. That's down from about 7% 2 years ago, so it's a third of what it was. And yet the Fed hasn't budged. It's time for them to budge and to show that they remember that they have a two-part mandate. It's not just inflation, it's also about jobs, the economy, as families feel it on the ground. The best way to signal that is go with a big rate cut.
One point that many viewers wanted me to ask you about is if we're criticizing the presidential candidates for sort of wanting more influence over the Fed, I'm talking about Trump in particular here, is it appropriate for senators to be writing a letter expressing a viewpoint that is putting pressure on the Fed to do something that is seen as overtly political because it comes from one party? What is the difference there? Just explain why that is appropriate, but not from the president.
I will make 2 points here. The first is that we are making an economic argument here. And you and I have talked many times about this. It's a consistent economic argument reminding the Fed of their legal obligation to follow two parts, right? They have a two-part mandate here. And that's part of my job in oversight as a senator. That's what I'm supposed to do. I also want to be clear, I'm doing this right out in public. Everybody can see it. You can see exactly when it happens. That is very different from someone saying, I want to be able to squeeze behind closed doors and I want to be able to do it for political reasons. I think those two are very different. But understand, I ain't saying anything in private that I'm not saying right out there in public for everybody to evaluate.
Let's turn to the economy more broadly. Senator Kennedy just said it basically that the economy is not in as good shape as it should be. He said at one point, I believe, that it is weak. Do you share that view? And if you don't share that view, I'm going to ask a question I've asked several times in the past couple of weeks. Why hasn't the Democratic Party's message on the economy, that it's not all that bad, in fact, has done pretty doggone well under the Biden-Harris administration, why hasn't that message stuck?
So let me start with the first, which is a fundamental economic question. I think we have a very strong economy. We've seen the kind of growth. In fact, you were citing it to Senator Kennedy. I caught part of the interview, and that's good. But this is where Powell and monetary policy have begun. Remember, Powell's tool of keeping those interest rates high was deliberately to try to encourage more layoffs. That's what he called cooling the economy. We went over this multiple times in hearings.
I mean, he doesn't want to be remembered as Volcker's,
well, I don't want him to be remembered
as the Fed call it Burns or some of the others who let inflation become entrenched.
I understand that. But again, the law says you have to remember both parts. And I don't want Powell to be remembered as the guy who crashed the economy. And we have seen some softening in jobs numbers, for example. We're at, 140,000 new jobs added last month, and that's just softer than it was before. So I think there are signs that Powell has held the interest rates too high for too long. Your second question is a political question, and all I can say there is families suffer from costs being too high. That's why, as Democrats, we've been fighting hard to reduce those costs. And you know what? We've done a fair amount of it. $35 insulin, $2,000 cap on what seniors spend out of pocket on health care costs. I've worked breaking the hearing aid monopoly so people can buy hearing aids. We're going after price gougers at the grocery store and at the pump. And what do Republicans say they want to do? They want to roll all that back. So what are their plans to lower costs for families? I'm not hearing anything.
What people feel and what the data say can be two very different things. And people feel immediately the tax that inflation exacts on their household budget. How much? I mean, I've heard you and others talk a lot about price gouging. How much do you think that really has contributed to inflation in this country? My sense is there's been opportunistic price hikes that companies have done.
That's gouging.
Because, well, yes and no. I mean, there are also price hikes that are related to supply chain disruptions and the fact
but those are not.
Those are not.
Those are not. And you
those
called them opportunistic.
Well, opportunistic. When inflation is going up. We had 20 years where companies had virtually no pricing power, right? Inflation was virtually zero. Now they have an environment where they do have pricing power. Well, so where do you draw the line between an opportunistic price hike and an enterprise that's actually gouging it? What evidence is there that companies are doing it?
So I'm still having a hard time understanding what opportunistic is, because what you're saying is they're not passing along the increase in their own costs. Instead, they're raising prices above that. And how do we know that happened? Well, we have the 2 years coming out of the pandemic, and we know that inflation went up by about 14% in that combined 24-month period. And we know that profit margins went up 75%. That is a five-fold increase in profit margins. Now, look, if all that was happening were these giant corporations were simply passing along the increase in costs, then the profit margins would have stayed roughly the same. They went up five-fold. You can't tell me that's not price gouging. But let me give you one more. You don't have to listen to me on it. You listen in on the earnings calls. And the earnings calls, these CEOs have gone on the phone when they're talking to their investors, not their customers, with their investors, and they say, oh, inflation has been very, very good to us. Because as long as consumers are talking about prices going up, and it sounds like it's all inflation, that gives us a chance to raise our prices. And here's another part we know. In industries where there's more concentration, there's been a lot more increase in profit margins. In other words, where you have dominant pricing power.